This group presentation is the case study of Bill and Kathy Collins. The introduction, needs, and types of insurance recommended will be covered by myself, Niba Philip. The available government plans and existing coverages of the couple will be presented by Nida Tampi. And lastly, the additional concerns and insurance coverage recommendations will be discussed by Irene Thomas. Bill and Kathy Collins are a couple aged 32. Bill runs a business and Kathy is an architect. They are now at a certain stage in their life where they are thinking of starting a family and get settled. So, they are planning to meet their life insurance needs. Why do they need insurance? We know that insurance is a way to provide financial support to us and our loved ones during tough times. It plays an important function in sharing of risks. It helps to cover our future expenses such as medical bills, debts, mortgage payments, and tuition. There are cases where unforeseen accidents could happen, like disability, illness, or injury. Insurance helps us to get a grip on the sudden expenses that might rise. It also helps in meeting the educational expenses as there are educational insurances that can cover the cost of tuition, books, and other related expenses if one cannot finish their degree. Insurance is also seen as an assurance by mortgage lenders as it can cover any costs of repairs or replacements of damage, protection against theft, perils like fire and water. So, it will be good for the couple to take insurance. Considering both Bill and Kathy's situations and lifestyle, we can say that it would be ideal to take disability insurance. It is given that Bill has a history of heart disease in his family and has even adopted a diet plan. Same goes with Kathy because her mother has diabetes and high blood pressure and her grandfather also has Alzheimer's. So, disability insurance helps in protecting their family if such unexpected illness or accidents which may happen and make them unable to work and earn an income in the future. It it is also known that disability insurance can replace about 60% and 85% of their regular income and up to a maximum amount for a specified time if one temporarily can't work. Another suggestion that we can make is a blend of term life and whole life insurance. Term life insurance can be termed as one of the cheapest type of life insurance. And about whole life, it allows you to borrow against or withdraw from the policy for other financial needs. Also, whole life insurance in whole life insurance, loans and withdrawals are generally tax free and loans may have beneficial terms as well. So, it is advisable for them to take disability insurance and a blend of whole life and term life insurance in the future.
And next, we are discussing about the government plans which are available for the couple, Bill and Kathy. The first one is the employment insurance and sickness benefits. The employment insurance and sickness benefits provides temporary financial assistance to employed and self-employed individuals who are unable to work due to illness, injury and quarantine. It may provide income replacement for a specific period, typically up to 15 weeks. So, in the case of Bill and Kathy, it was mentioned that they have a disease history like Alzheimer's, and Bill has a family disease which is related to heart. So, this will definitely benefit them in the future. And next is the government healthcare and medical benefits. In Canada, there are some provinces which provide coverage for medically required services, including hospital visits, doctor appointments, and some medical procedures. So the government is also taking some initiative to protect the person who are with the health issues and who need medical attention. And next one which would benefit the couple will be Canada Pension Plan, that is CPP. The CPP provides disability benefits to individuals who have contributed to the CPP and are unable to work due to severe and prolonged disability. To qualify for CPP disability benefits, the applicants must have a disability which is expected to last at least 1 year and have made enough CPP contribution during their working years. So, as mentioned, the Bill and Kathy have some medical histories regarding some diseases in their family. This would also benefit them. And next one is the employment insurance, maternity, and parental benefits. For Kathy, who is self employed, and she may consider opting into employment insurance, maternity, and parental benefit program. The maternity benefits provide income support to up to 15 weeks and for the biological mothers and who are unable to work because of the pregnancy and the childbirth. The parental benefit offer income support up to 35 weeks to the parents who are caring for a newborn or newly adopted child. So this would also benefit the couple as they are planning to start a family in the future. And next program would be the provincial drug coverage program. Depending on the province in which they reside, there may be government sponsored drug coverage programs that provide financial assistance for the prescription medications. And these programs often have the eligibility criteria based on the income and the medical needs. So this would also benefit the couple in near future. And disability tax credit. The disability tax credit is a non-refundable tax credit that can be claimed by the individuals with disability. So this is also the program can be included that can be beneficial for the couple for supporting their family members to reduce the amount of income tax they have to pay. So these are the major government plans that are available for this couple. And next we are discussing about the existing coverages of the couple. So the first one is the group life insurance. The Bill has almost 100,000 of life insurance coverage through his employer's group benefits that would definitely benefit him in the future. In addition to that, they have a spousal life insurance coverage of 50,000. And next, they also have a short-term disability plan. The Bill has a short-term disability plan that covers up to $500 per week for 6 months. That would also benefit them for the emergency needs. And next is and lastly, they have health and dental benefits. Both Bill and Kathy have access to dental and eye care benefits up to $1,000 each annually with no deductible or limitations. So that is the existing coverages of the couple.
So here we are discussing the additional concerns in this case. So first would be debts and mortgage. So it's already mentioned in the question that the mortgage which is remaining for the couple is 3,50,000 and the line of credit is 20,000. So in order to finance the mortgage and the line of credit, and in case of some unforeseen circumstances, the couple would require life insurance coverage to finance all these. The second additional concern would be income replacement. That is, as the family grows, there would be more successors coming up, and if at all either of the spouse passes away or if something happens, then for the surviving spouse to maintain the same lifestyle or to manage all the financial responsibilities, it would be beneficial for them to have a life insurance policy so that they can use the benefits from that to finance all the responsibilities. The third one would be dependence. That is, once Bill and Kathy decides to have a family and have children, there would be an additional case coming up of the cost of education of the children. So in case if either of the parents passes away, the needs of the children can be met if they go for a life insurance policy with the benefits they receive from it once the parents passes away. Another concern would be disability insurance. That is, if either Bill or Kathy gets disabled. Here in the question it's clearly mentioned that Bill has got some interest towards adventure sports and riding motorcycles. So there are chances that there might be some unforeseen circumstances, or there are chances for the disabilities to take place. So it is better to have a disability plan. So Bill already has a short-term disability plan, but it would be beneficial if they go for a long-term disability plan so that they can maintain that financial stability. Also, there are various health risks found in this case, like Bill's family has got a heart disease history and he has also got smoking habit, which can actually
lead to various problems. So it is better that they have some insurance. Another additional concern is medical conditions. Like here, it is clearly mentioned that Kathy's family has got this history of diabetes, high blood pressure, and even Alzheimer's. So it is better that they go for a insurance plan in order to maintain the financial planning well and to meet unforeseen circumstances. Another one would be estate planning. That is, as they start a family, the wealth would increase and the number of successors would increase. And it's very important that they start talking about bills and estate planning, so that once the parents passes away, the assets are transferred properly to their successors. Another concern which we can talk about is investment and retirement planning. So here already RRSPs is given, so it is very important for the couple to have RRSPs and TFSAs, and first of all to identify the retirement goals and as such make contributions to the RRSPs and TFSAs to reach their retirement objectives. The final concern would be business consideration. Here, in case of Kathy, she is a self-employed architect. So she might require additional insurance coverage to protect herself and her firm from financial crisis, such as business interruption insurance or liability insurance. Now we are moving on to the recommendation, insurance coverage recommendations. So normally insurance coverage, the amount of the insurance coverage depends on various factors and also depends on the interest of the clients, but normally it's better to have 5 to 10 times, as a thumb rule, to have 5 to 10 times one's income in life insurance with a term length which can last at least until their children graduates. So in this case, we are considering the 10 times as the assumption. That is, we are considering the plan of 10 times the annual income. So as per the calculations which is mentioned in the Word document, 10 times the annual income, 10 times the net income would be 1655,000. So here we can conclude that the insurance coverage which is required in this case would be between 16 lakh and 17 lakh to meet all their expenses.